Hey guys, Boris House from BK Forex. Welcome to our Forex Weekly Technicals for 10/21/10/28. As always, trading foreign exchange or margin carries a high level of risk when every suitable for investors. I ask you to read this disclaimer very carefully to understand all the associated trading in their margin and seek advice from an independent financial advisor if you have any doubts. Well, definitely a down week for the dollar, and certainly very, very evident in the trade in the euro. We'll take a look at the charts. The euro, of course, ran through the 37s today, but backed off of it a little bit into the close of the day, and we're now sitting at a very key resistance level. On an annual basis, basically on the yearly highs, we have 37.10 as the resistance. And if the euro really can't push through that and starts to back off that level, we're in a danger of setting up a double top here with very minimum downside target of 3,500 as you're going to get profit taking kicking in. If on the other hand we can push through the 37.10s to maybe 37.50s, that opens up a vast open space here, all the way possibly to 140. So definitely worth watching. Euro to me is the cusp of the trade here as to whether the dollar really collapses and has a couple of hundred more points of downside to go, or whether the worst of situation for the dollar is kind of over and we may be coming out here into a stall pattern. Certainly, when it comes to the cable, the situation is a little bit more positive for the dollar because we're underneath the highs here. Although the cable has definitely had a big recovery. This is obviously a weekly chart, so you can see the big recovery on the weekly chart. If you look at this on the dailies, we are still with just below the upper highs here on the head and shoulders pattern. And if we start to flame out here, we're coming right back down to the 59 hold. So the support in the euro 35 to the downside, 59 in cable, but the really big breakout levels 62.50 in cable and 37.50 in euro that would really make a very unambiguous anti-dollar statement in the market. One of the more interesting things I think that's happening from a technical point of view is how well the dollar is holding up against the yen, given the fact that you've had everything thrown at it, and the fact that there really clearly is not going to be much of a taper until probably next year, perhaps even into the middle of next year. Dollar yen has really not suffered as much of a decline as you would have thought it would have. It certainly has had a pushback off the 98s, but we're still holding here above 97 support. Now, as I've been saying for a long time, yen definitely looks pretty terrible with lower highs continuously. But at the same time, it's not making fresh lows. And that suggests that we may be in a period of consolidation here where the dollar is not going to have much of a push to the downside. If we break the 97s here to the downside, then it becomes a much more negative structure for the dollar. And we could be looking possibly towards a 95 test all the way down to the bottom over here. But if we hold up above these levels, the longer we hold up above these levels, actually, the more positive it becomes for the dollar in the sense that the shorts can't push it down, which means that the next natural trade is going to be to the long side. The one thing that has actually traded well against the dollar has been the Aussie, and the Aussie continues to push. Look at the Aussie today. We took out 96.50s. Yesterday was 95.50s. It's just been a unbelievably strong one-way run. As a matter of fact, if you look at Aussie, what's interesting here is how powerful this recovery has been against an incredibly negative sell-off that we had from April until August. I mean, we basically just decimated the trade all the way down, made it kind of a double top here, double bottom here, and now it's a W formation with a nice big breakout. But having said this, again, also absolutely key levels. In many ways, what's interesting, I think, about the next week coming up here is it's a sort of a referendum of, are we going to double top on the dollar in the sense that is everybody going to just basically stall at these key resistance levels, or are we going to break out and is the dollar really going to start to crumble as the week progresses? So in the Aussie, cable, euro, all of these levels become even more critical as the week begins because we're now at these key big resistance points, and seemingly it's gonna. If we do fail here, it certainly has a corrective element to it. In the Aussie, the corrective move here right now, 95 is the most immediate corrective move, but the deeper correction move is 94s. Similarly, as I said in the euro, 35 is the corrective move there, and 59 in cable. If you're brave, this is certainly a very, very low risk trade in the sense that you know where your resistance points are. There's basically no more than 100 points of potential topping out in any of these pairs. So the risks here are relatively contained to the upside. And if you do get a reversal, certainly the reversal could be strong. If you do get but if you get a momentum breakout here, you certainly have to cover because I think if the momentum breakout happens, it could be deeper and stronger than most people believe. As a matter of fact, what would be shocking but not at all impossible to conceive is the Aussie going all the way up to almost parity. If we get a big dollar sort of a squeeze on the dollar longs. So we have to watch this carefully as it goes. Taking a look at the other comp dollars, we haven't looked at them in a while. Dollar CAD not as clean, as strong a break as Aussie CAD. As a matter of fact, one of the more interesting things that people have constantly pointed out. Let me see if I have this in my. Yeah, I do. Is how strong the Aussie CAD has been, and we've been talking about this in the chart of the day. That Aussie CAD targeting a parity has been a very, very strong trade. We're now only 50 points away from parity in Aussie CAD, as dollar CAD certainly not showing nearly as much strength. Next week we actually have the BOC rate decision, so it'll be interesting to watch, because if that sounds uber dovish, that could be just the final tipping point to push Aussie CAD into the parity category. In the meantime, dollar CAD obviously just sort of trying to hang ahead of this 102.50. For dollar CAD to get super bullish, we got to clear this 102s. 102s and really 101.50s. If we break either one of these levels, that would put us well on target towards parity. But until that happens, dollar CAD is definitely the laggard as far as the calm dollars go. And lastly, let's take a look at the Kiwi dollar, which this is what's interesting. Kiwi dollar has been sort of unbelievably hanging at this 83 level for a long time, and then it broke to the top side. And once it took out the 84s, it really was just a one-way move towards the 85s. But again, as we come up now into this big momentum move that we've had over the last 4 or 5 days, we're now coming up into the final wall of resistance at this 85, 86 level, and that may be much harder to overcome. So I think the net takeaway for the beginning of the week next week is just how much momentum is there in this dollar sell-off, because we're now sitting at all critical levels again on the annual basis in most of the currency pairs. And if we cannot overcome those levels, the next most likely move is going to be profit taking in all the high risk pairs as the dollar gets some of its groove back. So be watching this very carefully. Wishing you guys the best of luck and the best of trading next week. This is Boris Schlossberg, over and out.